Okay, let's talk about that feeling, that gut punch when what looked like the perfect breakout, maybe in options, gold, or even crypto, just,
Yeah.
well, it fizzles.
Oh,
It
yes.
turns sideways, your profits just vanish, and you're kind of left scratching your head. We've all been there, right?
Absolutely. It's incredibly frustrating for traders trying to catch that momentum. You think you've got it, and then nothing.
Exactly. And that feeling, being caught in that market chop, that's really what we're unpacking today. We've been looking at this really interesting source, a Booming Bulls YouTube video that goes deep into the Average Directional Index, or ADX.
Yeah, it's quite detailed. And our goal today for you listening is really to understand how this ADX indicator could potentially become, well, a valuable part of your toolkit.
Right.
The source suggests it offers a pretty strong probability, they mentioned something like 80 to 90%, of helping you navigate those tricky sideways markets and spot the real trending opportunities.
80 to 90% is quite a claim.
It is. Now, obviously, it's important to remember, no indicator is a magic bullet. Nothing's guaranteed. But having a solid grasp of ADX can definitely, potentially improve your odds.
Agreed. And the video makes this bold claim, calls the ADX the ultimate trend strength indicator.
Yeah.
So, okay, let's get into it. What exactly is the ADX? What's it all about?
Okay, so fundamentally, the ADX is an indicator that, well, it usually appears below your main price chart.
Mm-hmm.
The video describes it as a type of oscillator, which basically means it moves between high and low values, kind of like waves.
Okay.
But what's really interesting, and maybe a bit different, is what the ADX doesn't tell you directly. Unlike something like the RSI, which might hint at overbought or oversold conditions, maybe suggesting a change in direction.
Right. Potential reversal points.
Exactly. The ADX isn't really focused on predicting which way the price will go, up or down.
So it's not giving us a direct buy or sell signal then.
Understood. Precisely. Its main job, its purpose, is to measure the strength of a trend. Simple as that. Is there energy behind the move, or isn't there?
Okay.
So if the ADX value is climbing, it's suggesting that a significant price move could be up, could be down, is becoming more likely. There's conviction building.
And the opposite.
Conversely, yeah, a low ADX value suggests the market is probably stuck in a sideways phase, just consolidating, lacking that strong momentum. Chop City, basically.
Right. And the video did mention we'd still need other tools, right? Like maybe just looking at the price action itself or other indicators to actually figure out which way that strong move might go once the ADX says, hey, something's brewing.
That's exactly right. Think of ADX more like a filter, or maybe a gatekeeper. It helps you assess if the current market weather is good for trend following, regardless of whether you're looking for longs or shorts.
Okay, filter, gatekeeper. I like that analogy. That's helpful. Now, let's get practical. How do we actually use it? The video breaks down specific settings for different markets, starting with Nifty, Bank Nifty, the Indian stock market, generally those markets with roughly a 6-hour trading day.
Yeah, it's interesting how the source really emphasizes adapting things. It's not one size fits all. So for Nifty and similar markets, the video suggests switching your chart to a 15-minute time frame
15-minute, okay.
and the ADX period setting itself. Just keep the default at 14. That's pretty common, actually. It seems to strike a decent balance between, being responsive but not too noisy.
Got it. 14 period, 15-minute chart.
Right.
And then there was this key level, drawing a horizontal line at the 20 mark on the ADX itself. Why 20? What's special about that?
Well, that 20 level acts as a kind of threshold, a critical line in the sand almost.
Right.
The video suggests that when the ADX line drops below 20, it's a strong hint that the market is likely, going sideways, just consolidating. They even show examples in the video on a Nifty chart where you can clearly see periods where the ADX is hanging out below 20, and sure enough, the price is just shopping around, going nowhere fast. These levels, like 20, are often found through observation. They seem to correlate well with weak trends in many assets. Not a hard rule, but a good guidepost.
So it's like the ADX is whispering, hey, maybe just chill out for a bit. Not much power here.
The presenter in the video even shared their own experience, saying they deliberately avoid big trades when ADX is low.
Yeah, they mentioned noticing smaller P&L swings during those times.
Which makes total sense, right? Less decisive movement means fewer big wins, but also fewer big losses.
Exactly. And if you think about risk management, just knowing when the market's likely to chop can save you from getting whipsawed back and forth on these little meaningless moves. Saves capital and sanity.
Definitely save sanity. Okay, so that's below 20. What about when the ADX climbs above 20 on the Nifty? What's the interpretation then? Right, so while the video doesn't give a specific upper number to watch out for here, the main thing is just being above 20.
Up.
This suggests the market is showing stronger trend momentum. Things are moving with more conviction. This potentially creates, a better environment for finding and acting on trading opportunities.
Makes sense.
That election week example they used in the video, where high ADX lined up with those huge market swings, that really drives the point home.
Yeah, that was a good example, a real-world tie-in. So you can kind of gauge the market's mood using these levels. The video even mentioned how this could be useful for different trading styles, specifically mentioning options traders, buyers, and sellers.
Yes, that brings up an interesting point about strategy, doesn't it? For option buyers who typically want big, fast moves to profit these low ADX environments, below that 20, maybe 23 level they mentioned, those can be really tough. Time decay eats away at the option value, and there's no strong trend pushing the price. So the video suggests option buyers might want to be more cautious, maybe even sit on the sidelines when ADX is low.
Right, because their clock is ticking, they need movement. But what about the other side, option sellers?
Well, it's fascinating, isn't it? For option sellers, it could be the complete opposite. They might actually like those low ADX conditions.
Really? How so?
Because strategies like, say, selling straddles or strangles, they profit when the underlying price doesn't move much, when it stays in a range.
Of course.
So if the ADX is saying, hey, probably sideways movement, that could be a green light for those kinds of strategies.
Interesting. So the same indicator reading can mean different things depending on your strategy. Useful for both sides.
Yeah.
Okay, let's switch assets. Gold. The settings are a bit different here, aren't they?
Yes. Slightly different approach for gold, according to the source. They recommend sticking to a shorter time frame, 5 minutes for gold.
5-minute chart. Got it.
But still keeping that default ADX period at 14. The main change is the key level. For gold, they suggest watching the 25 level.
Okay, so 25 instead of 20. And the logic is the same. ADX below 25 in gold suggests potential sideways chop.
Exactly. The video actually shared a live trading example, which was quite telling. A sell trade based on a nice-looking box breakout in gold.
Yeah.
It failed. And it happened during a period when the ADX was low, below 25. It really highlights how the indicator might have warned you, careful, this breakout might not have legs.
So even if the pattern looks good, the ADX acts as that extra filter, saying the underlying energy might not be there to sustain the move, like a momentum check.
Precisely. Momentum check, that's a good way to put it. And naturally, the video contrasted this with situations where gold breakouts did work, and those happened when the ADX was higher, showing that momentum was present. It just reinforces using ADX as maybe a confirmation tool or, like you said, a filter.
Okay, that makes a lot of sense. Now let's hit the third one, Bitcoin. Settings here seem to follow the gold pattern.
That's right. Very similar setup for Bitcoin in the video. Again, a 5-minute time frame. Standard ADX period still 14. And that same key level as gold, 25.
25 again. And the interpretation follows. Below 25 suggests Bitcoin might be in for some choppy, maybe directionless price action. I think the video called it a Gatia move during one low ADX weekend example. Poor or weak movement, right?
That's right. Yeah. Gatia move, meaning subpar, weak action. The takeaway is simply that during these lower ADX phases, Bitcoin, much like gold, can just drift around without a clear, strong trend. That makes it pretty challenging for traders looking for those big momentum plays.
Makes sense. And conversely, when the ADX starts picking up in Bitcoin, above 25.
Just like the others, yeah. Increasing ADX in Bitcoin tends to line up with more significant breakouts, more sustained trends. The video mentioned an example. I think it was a $2,000 price move.
Wow.
Yeah, and during that move, the higher ADX values were basically confirming the strengthening trend, potentially offering better, higher probability entry points for traders who caught it.
Okay. So across these different assets, Nifty, gold, Bitcoin, the ADX, okay, with slightly tweaked levels, but it acts as this consistent gauge of trend strength, helping you try and differentiate between, real moves with potential and just noise or sideways grind.
That's the core idea, yes. But, and this is important, like any tool we use, ADX isn't foolproof. It's not perfect. The video is upfront about what it calls the catch, the main limitation you really need to be aware of.
Ah, yes, the drawback. There's always a catch, isn't there? What is it?
Well, the main issue pops up during that transition phase, when the market goes from low ADX, sideways chop, to high ADX, trending strongly.
Okay.
A really significant price move might actually kick off before the ADX line itself manages to cross above those key levels we talked about, 20 for Nifty, 25 for gold and Bitcoin.
Ah, I see. So you could miss the very start of the move.
Exactly. There's a possibility you could miss the initial burst, the very beginning of a strong trend, because you're waiting for that ADX confirmation.
So By waiting for ADX to cross, say, 20 or 25, you might end up entering the trade a bit later, potentially leaving some profit on the table from that first part of the move. The source even tried to quantify it a bit, suggesting maybe you miss hitting one or two profit targets out of, many potential trades over time.
That's the trade-off, yes. You have to weigh that. However, the video makes a really strong counterpoint. It highlights the huge benefit of potentially avoiding numerous stop losses during those long, frustrating sideways periods.
Right, those periods that just chew up your capital and your confidence.
Exactly. So the argument is maybe missing the very start of a few good trends is a worthwhile price to pay for preserving your capital and, frankly, avoiding the stress of being constantly stopped out in choppy markets.
That's a really important perspective, isn't it? Looking at the bigger picture of risk management and also the psychological side of trading, dealing with that frustration. So how should we think about applying this strategically? What kind of mindset helps when using ADX?
Yeah, the video really emphasizes using ADX primarily as that filter we talked about, a way to help manage your risk and adjust how active you are. So when ADX is low,
Below 20 or 25.
right, the recommendation is pretty clear. Either consider staying out of the market altogether, or if you do trade, significantly reduce your position size. It's about protecting your capital when the odds might be less in your favor for a trend.
That just makes logical sense. Less confidence in a trend means less risk exposure.
Precisely. And then conversely, when the ADX is showing strength, when it's above those key levels, the video suggests that's the time to be potentially more active. Maybe increase your risk slightly, but only on really high-quality setups that align with that strong trend the ADX is indicating.
So it's about being more selective, maybe more patient, but then having more conviction when the conditions look right, according to the ADX. The video also pushed this idea of thinking like a business owner, right? Focusing on probabilities, managing risk over the long haul, not getting hung up on any single trade outcome.
Absolutely. It's about playing the probabilities. Recognizing that no single indicator, not even ADX, is going to give you winning trades every time. But using tools like this thoughtfully, well, can improve your overall odds and help you navigate different market conditions more effectively, hopefully more profitably.
Okay, great discussion. Let's try and wrap this up. What are the main takeaways from this deep dive into ADX based on that booming bulls video?
Okay, I think three main things stand out. First, ADX is primarily about measuring trend strength, not predicting direction. That's crucial.
Strength, not direction. Got it.
Second, using those specific key levels, roughly 20 for Nifty on the 15-minute and 25 for gold and Bitcoin on the 5-minute, can potentially help you filter out or at least be very cautious during those sideways choppy periods.
Oh, did chop. Okay.
And third, yeah, there's that catch. You might miss the very beginning of some moves by waiting for ADX confirmation. But, and it's a big but, this might be a good trade-off for avoiding potentially numerous losses during those directionless phases.
Right, the trade-off between missing some upside and protecting capital. Makes sense. So while ADX seems like a really useful guide for navigating these conditions, here's maybe a thought for you, the listener, to ponder. What other indicators or maybe analysis techniques could you explore to potentially work alongside the ADX? How might you maybe refine entries and exits further, or perhaps address that mismove disadvantage a bit? Maybe combining it with volume analysis or looking for specific price patterns within that ADS context. It's all part of that ongoing journey, isn't it? Learning and refining your own approach.
That's a great point. Synergy between tools, that's often where the real edge lies, isn't it? Finding combinations that work for you.
Exactly. And on that note, hey, if you have burning questions about other indicators, other concepts you'd like us to maybe tackle in a future deep dive, do let us know. We're always curious to explore new things that could help us all understand these markets a bit better.
Absolutely. We're definitely learning right along with you.
Thanks so much for tuning into this deep dive. Until next time, keep exploring.